Okay, welcome back. I mean, at the bottom of the screen, PB Fintech deal is done. 5% equity changes hands in 2 block deals. That is what is coming through. So it looks like I think all of the stuff which was being offered has been traded. So very little in the secondary market once market opens. So that's a good thing for PB Fintech as we start this session. Anuj is here in the studios to run us through what he's making of things in terms of this trading setup. Anuj, hi, morning.
Morning, Prashant. Morning, guys. Very sharp recovery in the US market overnight after the first hour fall. The first hour looked like things were getting ugly, but then you saw a sharp recovery. And look, the big trade in India, like I've been pointing out for a few days now, is in IT and the new age stocks. This PB Fintech deal, by the way, has happened at 456 versus 461, the price in a block window. Tells you the kind of appetite which is there now at current price for some of these new age stocks. So this is the kind of set of stocks which is likely to do well, while Bank Nifty maybe goes through some kind of underperformance after the recent big rally. And mid and small caps for last 2-3 days are clearly indicating that they are in for a big rally. Global cues, I just want to point out one thing about the way the bond yields have moved. The US 10-year bond yield technically has now broken 20, 15, 100-day moving average. And the next target to watch here is the 200-day moving average is 3.54. If you combine that with crude prices and the algo trades, it's a clear trade of sell Bank Nifty and buy Nifty IT. That's how things are. And today Reliance could also support a Nifty because of that windfall tax gain impact. So on the Nifty, the levels to watch on the downside, the 20-day exponential moving average of 18,742 and the 50-day exponential moving average of 18,620 in terms of supports. On the Bank Nifty, 43,500 once again proved to be big resistance yesterday. That remains your big resistance. It's overstretched. The 10-day exponential moving average comes in at 42,872. So maybe if it reaches there, then you see some buying. But maybe Nifty IT and the new age stocks could be the theme of the day today.
Okay, all right. Thanks a lot for that, Anuj. Well, let's hop across to Manoj Muralidharan. He joins in to give us his derivative trades. Hi, Manoj. Morning. Go ahead.
Good morning, Nigel. Nigel, I guess at least for the index, we have seen that 18,800 is a strike where there is good amount of call and put writing, and that is closer to 250 rupees on the premium. So we expect the Nifty might be range bound. So the next directional buy for Nifty would come somewhere close to an 18,600. This is the spot Nifty that we're talking about. We know that the futures are trading at almost 130 to 140 points premium. So wait for the dip. That would be a better level to go long on the Nifty. As of now, the call and put options can be sold for the 8th December expiry. The stop losses here should be 300 and the target can be close to 140 on that. And like Anuj was mentioning, 43,500 strike for the Bank Nifty. Yes, there is good amount of call writers. So we believe that Bank Nifty might really underperform maybe for the next 3 to 5 sessions at least, and if that has to be taken up by the IT as a sector. But 42,700 is again a good support where there is a possibility of slight pullback. So we would prefer to go long, at least on Nifty closer to 18,600 and to sell the 18,800 short straddle at 230 rupees as a premium.
Manoj, thank you very much for that. Before we let you go, any trading ideas, any recommendations?
Yeah, for stock specific, I guess Tata Steel more than 2 months, it has been in that range of 100 to 106, 108. But last 4 days, if you see, there is good amount of delivery buying and a potential long built up, which we have seen positional wise. So we believe the stock is poised possible for an 8 to 9% for this series. So 109 becomes a good level to buy that with the stop loss 107, and there is a possibility of close to 160, 117 for the December series for this stock.
Thank you very much for joining in. Let's now talk about a momentumizer for the day. Surbhi is joining in and she's tracking Redington. Surbhi?
Hi, the stock that we are going to be focusing on today is Redington. The stock was up 31% in the last 1 month itself. The stock broke its at the high levels on 29th of November. It is above its 20, 50, 100 and 200-day moving averages. The delivery is also very strong on this stock. The delivery was 2.5 times its 5-month average quantity, and the traded quantity was also very strong. It was 2.9 times its 5-month average. Recently, the company has also signed an agreement with Polycab to become the national distributor for its passive networking solutions. So that's a positive as well.
Thank you very much for that. And the Q2 numbers were very strong. The company had reported a 25% top line growth, 26% bottom line growth. And since then, we've seen that big rally in Reddington, which is what Surbhi was alluding to. But let's talk about Maruti. Came out with their auto sales numbers yesterday. It's a mixed bag for Maruti in the month of November. Their total sales were up 14% year on year, but exports have contracted. The company said shortage of electronic components had a minor impact on the production of vehicles. My colleague Parikshit caught up with Shashank Srivastava, Senior Executive Officer, Marketing and Sales at Maruti Suzuki India, and began by asking about the November auto sales performance and the outlook going ahead.
November was, I think, a good month in the sense that we saw almost on all the demand parameters, good stability. The total wholesale in the industry it ended with 322,860 vehicles against 245,600 of last year. So that's a growth of 31.5% for the industry. That's pretty good. The retail estimate, though, are a little lower than the wholesale number. It's about 285,000 in the industry, 286,000 against the wholesale of 323,000. So the wholesale numbers are the highest ever November, actually. And this is the sixth consecutive month where we have seen the industry wholesale numbers more than 300,000. And an interesting point is that if you take 2.9 lakh, that 290,000 as the cutoff, then it is the 11th straight month where we have crossed that 2.9 lakh number. So it seems to be as if the industry has recovered to the beyond the pre-COVID levels.
Right. So you're saying that industry has recovered beyond pre-COVID levels. But just to ask you about Maruti Suzuki, in the statement from the company, you said that the shortage of electronic components had a minor impact on production, mainly in domestic models. Give us a sense of which were the segments, which were the models that were impacted, and to what extent?
Yeah, so the segments which were impacted to a large extent were the Ertiga, the XL6, which is, the MPV category, the Brezza and the Vitara, the Grand Vitara, which is in the SUV category, and also to some extent in the Swift and Baleno, which are in the premium hatch category. So these have been the models which have been affected to some extent by the non-availability of the semiconductor components. And of course, there were other models where we saw good recovery, especially in the Wagoner, Celerio, Ignis, Alto, Espresso segment, where we could have production back to the normal levels.
Right. What would be the current production shortfall?
So if you look at our pending bookings, they are around 375,000 at the moment. So obviously, and the bookings are largely in these models which I just mentioned. Obviously, our first target is to increase production of these models so that not only can we increase our volumes, but also help the consumers, more importantly, to have a lower waiting period. They've been waiting for quite some time in these models, and hopefully we can lower the waiting periods.
That's the Maruti management. The pre-open rates are settling down, not completely settled, another minute, 2 minutes or so, but a lower start is what the market is indicative of. Well, that was the Maruti management, by the way. Auto sales are in focus, and we'll continue to decipher implications for stocks. To help us do that, Basudev Banerjee is with us of ICICI Securities. He tracks the space. Basudev, good morning. Good to have you back on the program. Thanks very much. You just heard from the Maruti management. We've been getting commentary from others like Bajaj, etc. yesterday. Any implications for stocks from here? Anything incremental which you've learned looking at the numbers for November?
No, so not only for Maruti, the good part is across the PV side, even for Tata Motors or Mahindra, not much significant divergence between wholesale and retail. Unlike the two-wheeler space where for the second consecutive month, the divergence has been quite high. So, for example, sequentially, despite festive season ending in October, two-wheeler retails were slightly better. Whereas mostly if you look at for Bajaj or TVS or even Hero, month-on-month two-wheeler wholesales are down by more than 20% odd. So from that angle, I will say passenger vehicle retails, which are more or less in line with even pre-festive season months, So obviously October is a seasonally strong month. So even post-festive season, the quantum of retailing hasn't declined massively in line with seasonality. So that's a good part. And waiting period for many of the models being still there. People not getting models within 3 to 6 months post-booking. So new launch momentum will kick in from next calendar year. So PV is definitely going well, both on retail and wholesale front. Inventory levels are under control. A main thing to look at is from two-wheeler perspective, where destocking has been quite aggressive in past couple of months.
Basudev, for two-wheelers in particular, will you bring down your production estimates for the full year for Bajaj Auto or TVS Motors? And what is the volume growth that you're anticipating now? And is it lower?
No, that's what I'm saying, that if you look at two-wheeler retail numbers, October and even now in November, the numbers are indicating full year volume of almost 17 million odd plus, which is pretty much a strong growth. But whereas wholesale numbers, which are undergoing inventory destocking, is not reflecting the right picture. So now it's almost 4 weeks after Diwali. One cannot say that a delay in registration trickling into retail numbers. Definitely, it is strong retails which is happening even now. So if this momentum continues, my sense is from January itself, wholesale will start roaring in for two-wheelers also, where December anyways is seasonally not that a great month for wholesales.
All right. Hi, morning, Basudev. So how do you approach this space then? What's your top pick?
So from a long-term investment perspective, in the two-wheelers, our top pick remains TVS Motors. So no change in thought process just from few months here and there of wholesale retail. IQ volume crossed 10,000 units this month, which is a milestone for TVS Motors. And in the passenger vehicle space, definitely the leader Maruti Suzuki is there, where finally the UV launch momentum is picking up. And the prime driver for the stock price will be the margin recovery. So Maruti has done well in 2Q, and with favorable input commodity prices, crude softening a bit, definitely it will be favorable for them in the longer run.
Basudev, you track the ancillary space, tires, etc.?
Yes.
And is something changing there at the margin? I mean, Apollo Tyres has done well, some 7-8% this week. C8 is up some 4-5% this week. Any thoughts?
So definitely, if crude touched $80 a barrel from the levels of 95 a month back, so definitely crude derivatives constitute a big chunk of raw material basket for tire companies. And Apollo specifically, they are giving good visibility of free cash flow generation. So debt reduction, improvement in ROC through improvement in margin will be the key trigger for Apollo, where valuations are much below the peers like MRF and C8 tires. So valuation catch-up, margin improvement outlook, and debt reduction. So all those three things combinedly giving boost to Apollo's market cap.
Hero MotoCorp announced a price hike effective 1st of December. Have you heard from the other players? Are they planning to increase prices?
See, price hike from them are like not everybody is doing all together. So somebody are followers, somebody are leaders. So it's not necessary that if one player is taking, others will be taking at the same time.
Okay, all right. Thanks a lot, Basudev, for stopping by and giving us your take on the sector and the individual stocks as well. But good time to go across back to Mitesh for our 9:10 call. Mitesh, run us through the call.
Nigel, I would recommend a buy on Hindalco around on a mild decline, let's say around 458, 459. Keep a stop below 450. Look for targets of 475. Disclaimer: we have some call option positions here.
Okay, all right. Thanks a lot for that, Mitesh. Well, interesting. Hindalco and the likes, they've opened up more or less flattish. The metal index yesterday, it popped up in trade. The dollar, though, that's weakened considerably. So let's see whether or not at some point of time we see a bit of a fillip that's come in there. But the metal index has seen a good bounce in the last 10 to around 15 days or so. So let's see how things shape up. On the ferrous front, though, I'm a little bit more cautious because domestic prices are still at a premium in comparison to imported prices. So let's see how that shapes up, Prashant.
I mean, the other space, apart from metals, is IT, which had a very nice pop. I mean, stocks like Mphasis, Mastech, Persistent, apart from, of course, the large caps like TCS, Infosys, etc. So we'll see how these individual stocks really open up this morning. Let's look at policy bazaar as well. I mean, there is this big block which has happened, lots of demand, coming through. I mean, all of that getting absorbed pretty swiftly. That is opening up 4.5%. So at the margin, we've been pointing out that there is interest which is coming through. Prices have fallen quite a bit, and people are willing to at least take a bet right now that maybe for now the damage is done and there is a little bit of bottom formation. That is the one name out of, a lot of the other new age companies which is starting to see interest. I mean, we had Nilesh Shah recently with us, who kind of outlined the same. Of course, they've been early holders from the time of the IPO.
Even for Zomato, right? Earlier this week when Alibaba sold on that day, the stock actually ended higher. And then later we learned that there were names like Temasek who had bought into that block deal.
Yeah, and of course there is, let's have Paytm up as well. Maybe take a quick look because there was the analyst meet yesterday. And as we highlighted earlier, there are some upgrades, some more constructive commentary, etc., which is coming through from the analyst community. 507, 508. So that's another space you may want to watch out for. There is also, of course, the added tailwind of, the benchmark sort of risk-free rate in the US going down, which is a 10-year yield. That was down a big 10 basis points. That kind of helps at the margin as well. Now, Chris Wood, who writes the sort of well-covered Greed and Fear note, has made changes to his Model India portfolio. Nimesh is standing by for more on this. Nimesh, hi.
Hi, Prashant. So he has made changes in both the Asia long-only portfolio as well as the India portfolio. As far as the Asia ex-Japan long-only portfolio is concerned, as far as India, he's removed Godrej Properties and replaced that with Macrotech Developers with a 6% weight. So that's one stock, Macrotech, to watch out in today's trade. And in that portfolio, he's cut down the weight on Bajaj Finance by 1%. So these are the few changes in the Asia long-only portfolio. As far as the India portfolio is concerned, he's reduced the weight on Bajaj Finance and replaced that with SBI with 2% weight. He's again added Macrotech Developers and DLF by 2% and 1% in that India portfolio. And he's cut down weight in Godrej Properties and Century Textiles. And the other interesting thing is he's replaced Jubilant Foodworks with Adani Ports in the India long-only portfolio with a 4% weight. So these are the few changes both in the Asia long-only as well as in the India portfolio.
Nimesh, sorry.
Okay, all right, Nimesh, thanks a lot for that. Well, in the next few seconds or so, we'll be getting the initial rates that should come up for you on the screen. But for the time being, I think Sonal is joining in to quickly revise the revisions in those tax rates that have come. Sonal?
Yes, that's a big cut that we are seeing in the crude oil windfall taxes on crude oil production. That is, it has been cut to 4,900 rupees per ton versus 10,200 rupees per ton. On diesel, it has reduced to 8 rupees per litre versus 10.5 rupees per litre. On petrol, it will continue to be nil. And on ATF, it will continue at 5 rupees per litre. Now, CLSA says that cut in windfall tax is $9 per barrel versus a fall of $10 per barrel in crude oil prices in the last 15 days. Still, it's a positive because it would mean post-tax realization of $78 per barrel for as far as crude oil realizations for ONGC and Oil India is concerned. And right now, the stock prices are implying realizations of $45 to $50 per barrel. So that's why it's a positive.
Okay, all right. Thanks a lot for that, Sonal. Managed to finish that in time. Well, the Nifty has opened up with a bit of a cut, with a cut of around 40 points. Par for the course, I would say. A couple of those stocks are doing well. As Sonal told us, that windfall tax revision, well, it's given some legs to ONGC and Oil India. So both those two stocks have opened up in the green. Let's see how some of those auto names are reacting. Remember, Eicher Motors, the numbers were a little bit disappointing, but I think that one as well has opened up more or less flattish. It's down close to around 1% actually, Eicher Motors. Hero MotoCorp as well is down. So both those two-wheeler makers, they are down anything between half to around 1%. A couple of other notable movers, you have Westlife post the analyst meet. That's opened up well in the green. So that's opened up with a gain of close to around 2.5% the last time I checked. PB Fintech as well, that large trade took place in pre-open in the block window, and that's flying away up close to around 6%. Or it's a solid demand we saw for that one, and that explains why that stock has opened up well in the green. In terms of the broader markets, well, a couple of notable movers. Oil India is the one that's really bucking the trend. That's up 3.5% as we speak. On the flip side, MCX is down close to around 1% or thereabouts. But otherwise, the mid-cap index doing a relative outperformance. And by the end of today, if we could see that, that's what is something that will make the markets quite happy. Rima, what else?
But broadly, it's a quiet session, right? Markets are just consolidating. Remember, the markets have rallied 3.6% in the last trading session, We are at record levels, elevated valuations. So after this kind of a run-up over the last 8 trading sessions, markets today are just taking a breather. In fact, even the IT index has paused today. So the Nifty IT index, at least in the opening tick, is currently down close to about 0.1%. And remember, the backdrop of Asian markets is also negative. Hang Seng is down 0.6%. The Chinese markets are lower. The Japanese markets are down in excess of 1.5%. So across the Asian markets, if you could pull them up, you would see that there are cuts. And that, to some extent, is getting reflected in the Indian markets as well. A couple of the big movers include Trident, so that's significantly higher. SGVN is also up and about in trade. Lemon Tree's had a good week. The stock has rallied close to about 7% in this week itself. So that's a stock which is gaining in trade. On the losing side, Shilpa Medicare comes in for some amount of profit booking. Max Healthcare under pressure. JK Tyre, it rallied 14% this week. But over the last 2 days, you are seeing some cuts coming through. But Prashant, it's all about these oil and gas names like ONGC, Reliance, and plus crude prices are higher. Brent is at 87, and then you've got these new age companies like Paytm on fire.
No, absolutely, Rima. You know, there's no, in terms of gainers, there's no one space which is kind of, oil and gas, of course, is there. Metals are up about 0.6%. Yet to see IT emerge, but these are two kind of pockets which are already starting to come up with 0.75% and 0.5% gains, metals and oil and gas. You know, the sector which is doing badly is the auto index, which is down 1%. And so we just heard from the management of Maruti that stock is down 2%. Eicher is down about 2% as well. So these are two cuts which are coming through. Cement had a good day yesterday. They're seeing some pullback at the open. Ultratech is down 1%. Bajaj Finance is another one which is down 0.75%. So just mentioning some stuff with volumes. HDFC, ICICI Bank. So banks broadly are the other space which are seeing some amount of pullback right now. 75 points lower on the Nifty. The top two volume-led gainers are Paytm and Policy Bazaar. So that kind of tells you where we are at. And of course, I mean, if you want to add Nykaa to the list, Nykaa is up about 1.33%. And all three names are up there with lots of volumes. A standalone refiner like MRPL is another one, which is up some 4%, 60-61. Westlife is up 3%. We already mentioned that. I guess we'll just wait for new things coming into the mix. By the way, look at the futures premium, right? I mean, 150 points. Even though the spot is down 68, futures are at about 18,894. That's a 150-point premium on top of spot at this point in time. Reliance doing its job with a 0.6, 0.7% kind of run that we are seeing. It's done well over the last few sessions. Our market master of the day is Harsha Upadhyay, Chief Investment Officer, Equity at Kotak Mutual Fund. Harsha, great to have you with us here. Thank you very much for your time. You know, we had Pankaj with us, some time back, not very far back, who was kind of warning us about the fact that maybe at the margin, some of the corporate profitability matrices are deteriorating. Operating cash flows for one. I think that's the one that he was most worried about. Working capital cycles getting a little longer. Just want to start there. I mean, do you share his concerns, and how does that impact how you're managing your portfolio?
Good morning. Yes, some of these concerns are definitely there. It's not that although we have made new highs in the market, everything is hunky-dory. But I would say that some of these issues would get sorted out over a period of time, as we are seeing commodity cost pressures going down, and also the increase in working capital that we have seen is also to do with how we came out of the COVID period, right? Most of the companies had streamlined their inventory to a large extent. The inventory pipelines were yet to be filled, etc. And that's taking place now. And at the same time, we have also had commodity prices going up, which makes the overall working capital requirements to be high. Given that we have seen increase in working capital needs, which is also showing up in bank credit growth, for example. But as we go ahead over the next few quarters, we believe that inflation is going to moderate, and thereby some of these issues should improve. Profitability metrics for companies also should improve. And as it is, the leverage levels in the overall corporate sector is much lower. So to that extent, I think this is a manageable issue. I don't think that would spook the overall markets at this point of time.
Harsha, morning, and thanks so much for joining in. This is Rima here Would you dig deeper down into the small cap, mid cap universe? Because that's where there has been some amount of underperformance. So in the sectors that you like, is it time to hunt for value lower down the market capitalization?
Rima, we have been looking more at large caps at this point of time. Clearly, I think the pain that we discussed earlier is much more visible in the mid and small cap segment, not as much in the large cap segment. And also, usually, whenever there is some macro headwind externally, you would see large caps behaving much better. So, to that extent, and also the fact that mid and small caps have outperformed large caps by a wide margin in the last couple of years. We believe that the risk reward is favorable in large caps as compared to mid and small caps at this point of time.
Hi, Harsha. Morning. What about the IT space? That surprised everyone. The US yields have cooled off. We've seen a relief rally out there. I think you're a little bit cautious on that space, right? Do you still maintain that cautious view? Or with the kind of developments we have seen, do you expect things to move on?
Nigel, what we have seen currently is some re-rating in terms of valuations, which is understandable, given that interest rates are negatively correlated with equity valuations. And if there is a belief that at some point of time in the near future, there will be a pivot in terms of interest rates, definitely that's positive for equity valuations. And some of the beaten down stocks and stocks where there is growth, you would see some of those stocks getting re-rated in the expectation of interest rate movements. That's what exactly has happened in case of IT sector. However, in terms of the overall business outlook, I don't think something has materially changed as of now. Yes, maybe at the margin things would improve from here on, but we need to wait and see how it happens. For example, if you look at most of the commentary that has come post the results of last quarter, you would notice that most of the companies have been cautious in terms of outlook. The furloughs this quarter is at a higher level as compared to what you would generally see during this quarter in the previous years, etc. So overall, I don't think from a numbers perspective, anything has materially changed for the IT sector. But definitely, it was the most underperforming sector over the last 1 year. And we have seen a bounce back in the market valuations. And along with that, this sector has also bounced back. Yes, tactically, there could be some space for IT stocks to still do well in the immediate short term. But we need to really see how 2023 overall IT budget will pan out and how that's going to impact businesses. That will be more structural rather than what's happening in the market.
Harsha, by the way, PB Fintech is come off. It was up 6%. It's up some 3.5%. It'll come up. It still remains the top volume traded name. Paytm, though, has picked up a little bit. It's up a full 4% now, 520 on Paytm. Harsha, on some of these names, a little bit of the street is getting analysts, etc., getting a little constructive. Maybe because the price has fallen a lot, and at some price. At least a few start to see some value. What's your sense? I mean, anything looking interesting here?
On the overall internet space, we have been by and large very, very selective and very, very cautious even in the past, and that situation continues. Yes, stocks have lost a lot of value, but we really do not know whether that's the bottom for some of these stocks. Because there is going to be a consistent supply that's coming from some of the strategic or financial investors that were there in many of these companies. And at the same time, we probably understand some of the traditional businesses much better, both in terms of business as well as in terms of what valuations they should trade at, as compared to some of these new age companies. So the portfolio tilt is obviously is towards some of those businesses where we understand business dynamics and valuations better. That's been our...
Harsha, we've often seen that financial market performance precedes the earnings performance. We've started to see earnings growth pick up significantly. The outlook is a lot better for the banking space. But is it already priced in? Because as I said, usually stocks price in these things well in advance, well before the turning point. So is there value still left in chasing banks at these levels?
If you look at a larger cycle, yes, there is still some more time before we can call it a peak. But in the very short term, yes, markets have moved up quite sharply over the last couple of months. So to that extent, one needs to be cautious in terms of how markets would behave in the very short term. But I would like to point out a few characteristics that are associated with the late stage bull market, and none of those are present at this point of time. Although we have been making new highs on a regular basis in the last couple of trading sessions, we have seen none of them actually. For example, there is no euphoria around new IPOs. Hardly you hear about IPOs these days. If you look at the proportion of stocks, especially from a broader segment, which are making new highs on a daily basis, that proportion is really, really small at this point of time. If you look at the institutional flows into the market, for example, although you may see about $4.7 billion of inflows from foreign institutional investors last month, most of it is also at the headline number. I mean, if you dig deeper, you will find that foreign direct investments have gone down to almost similar extent because some of these blocks which came from private equity investors have been bought by portfolio investors. So net, we have not seen any large inflows from foreign institutional segment. Similarly, if you look at domestic mutual funds, the SIP flows have been consistent, but overall flows have definitely gone down over the last 3 months. And if you look at the overall earnings outlook as well, there is not so much of an euphoria and upgrade cycle as it. So clearly, these are not typical of a late stage bull market where you don't see euphoria at all. For us, I think, there is some way before you actually call it excessive valuation, or one needs to be really cautious about the market. But having said that, in the very short term, yes, markets can be volatile, especially since it has moved up quite a bit in the recent times.
Harsha, final question before we let you go. I recall we had a chat on city distribution, gas distribution companies. The Kirit Parekh report, the recommendations at least are more pro these companies. What's your take on it? Gas pricing, the input cost is likely to come down substantially, 18 to 20%. We had the IGL management who spoke to us yesterday. What's your take on it? Yeah.
Clearly, we have seen energy prices cooling off in the recent times. In fact, crude oil made a new low very recently, although it has bounced back from those lows. We still believe that overall the kind of hikes that were required in the past may not be required as you go forward, as you see gas prices moderating. And if that thesis comes through, then most of these companies are virtually monopolies in their own respect. And they have very, very strong business models and very high return ratios. And definitely you could look at re-rating of some of these companies if gas prices moderate from here on.
Okay, all right. Thanks a lot, Harsha, for stopping by and telling us, giving us your view on the markets. And I'll take that point away that as of now, no reason to believe that we are towards the end of a bull market. You sounded pretty optimistic on the markets on the whole. Well, time to move on then. And real estate, that's come back into our radar. Remember, the November registrations in the Mumbai residential market have seen a 17% rise in comparison to last year. If you look at the data for this year so far, 2022 is emerging as the best year in a decade for registrations. To get a sense about how things are functioning on ground, we're joined by Mr. Prashant Bindal, the Chief Sales Officer at Macrotech, who joins in. Hi, Prashant. Morning. Thanks so much for joining in. Well, good to see that registrations are going up. But yesterday we had a chat with Knight Frank, and they told us demand is going up, but builders are unable to pass through the price increases. And it could take some time before you can hike prices. I'm very happy to hear that, actually. But what's your sense? Have you all pushed through some price increases? Demand looks like it's quite strong.
Of course, the data which you talked about is just a reflection of the continuation of the housing trend that is visible for last 2 odd years. And the 2 years, there is the trends are very clear. The growth in the business is consistent. The demand increase is consistent. The business is increasing consistently. And as far as price increase is concerned, it all depends on how much inventory you have and what kind of a brand value you generate. And for us, for example, we have been able to take 4 to 5% increase in our existing products across board in this year. And that is what we intend to do year after year. Minimum 4 to 5% increase, because if the wage growth is about 10%, and as RBI says that their goal is to keep the inflation at about 6%, and if you're able to take price increase of 5 to 6%, that ensures that the affordability also stays, and there is a continuous increase in the price of the product, which is most important, because until unless there is a steady increase in prices, the sector cannot grow at the rate which it envisages it to be.
By the way, Prashant, hi, good morning. Prashant, this side. You'll be happy to hear Chris Wood, who's a well-known kind of equity strategist at Jefferies now. He's asking investors in his model portfolio to bet on Macrotech. I mean, he's actually put a large 6% weight and saying investors should put their money into your company, Macrotech. So just thought I should tell you that. Just a quick point, and we take what you said. Usually, real estate is at least in India, it has been very region-specific, right? I mean, there have been very few pan-India players. But the point is, because I guess the Mumbai market is so lucrative, more and more we are hearing players coming into the Mumbai market, aggressive plans, be it redevelopment, be it new projects, etc., etc. What are your thoughts? How does that impact competitive intensity for the in this market, the Mumbai market?
All said and done, I think everybody knows that Bombay contributes to almost 30% of India's GDP. In real estate sector also, even though you may talk about various regions, but Mumbai is Mumbai. If you talk about the total market of the real estate in India, the top 7 cities, which is close to about 225,000 crore market, 90,000 crore alone comes from Bombay. Bombay is a nation in itself as far as the real estate or the consumer behavior is concerned. So this means that the 45% business of the top 7 cities comes from Bombay alone. And Bombay, and that is why it has got so many segments. Each segment itself is 20 western suburb, eastern suburb, Navi Mumbai. Every segment itself is like is as I say, a state in itself of about 20-25,000 crore. So the opportunities are immense, and the best part is that this market is growing. It has grown from about 75,000 crore 3 years back to 90,000 crore in 2 years, and the rate at which it is growing, and it offers opportunities to everybody. But the key is that there are certain trends that are very, very visible. The trend is moving towards, I think that is moving across the cities, is moving towards the bigger branded players, because that gives the confidence to the consumers. Because whatever consumer research you do, the biggest desire of the consumer is to get the product on time and a world-class product with great amenities. And I think which only the bigger developers, because of their resources and expertise, can give. So in terms of that, more the players, better it is. The key is to give the product on time and give a great quality product. And Bombay is, as I said, is such a vast market, 90,000 crore market. It offers opportunities to everybody, provided you give you understand the consumer well and are able to take care of our concerns.
Prashant, Godrej Properties just announced that they've acquired a nearly 18.5-acre land parcel in Kandivali, Mumbai. Earlier this week, we got news that how Adani has won the bid for Dharavi redevelopment. Could you tell us what are Lodha Macrotech's plans when it comes to acquiring fresh land or bidding for redevelopment projects in Mumbai? What is on the anvil from here on? We already know the guidance, etc., that you've shared, but tell us what is in the future.
Of course, it is not only we believe that, and I think perhaps one of the reasons that Chris Wood, as Prashant was suggesting, would have suggested our name, is that it is not only the top line that matters, but also the quality of the top line. Because whatever top line you do, is it generating the right margins and is it generating the right cash flows? That is very, very important. And for that, you need to have the balance of the ready-to-move-in product, near-to ready-to-move-in product, and the new products. So the way we have worked out our 3 to 5 years mechanism is that perhaps there is an opportunity to grow at 10 to 12% every year. And out of that, 30 to 35% coming from ready to move in. That gives the incentive to close the products, to complete the products as quickly as possible. Demand for ready to move in is very, very high. And also keep on acquiring the products. So what we believe is that as we are acquiring the fresh land parcels, we believe that 30 to 35% of the business coming from the new land parcels. So this year, for example, our guidance is 11,500. We believe 3,500 business will come from the new land parcels that we acquire. And as we grow our business by 10% every year, roughly about that, hopefully for next 3 to 5 years, that kind of a contribution should keep on coming from the new product. But it's very important that we keep getting the business from the existing products to get the margins as well as the cash flows.
Prashant, the problem is that interest rates have started moving up. At what point of time do you think it'll pinch? We spoke to a couple of other developers. We spoke to DLF. They were indicating around 9%, and Prestige as well yesterday. When do you think that it starts denting demand?
You see, already I think it is already at its peak to a very great extent. It moves from 6.75 to 8.25 pretty quickly. And I think when the interest rate rise so quickly, they also come down. I think it all depends on the inflationary pressures. And I think as the inflation comes down to 5 to 6%, RBI will start reducing or the rise of the market rates will come down. So I think it's a phenomenon which will, at this moment, it has not hit us, as we have seen in the kind of demand. Perhaps a reflection could be perhaps 2 BHK, the bigger units selling better, where people have got more capacity to take loan or pay more EMIs. But I think till 9%, yes, I think what DLF said was right. Till 9%, at least in affordable segment, it is okay. Post that, yes, we do expect that it will start pinching. But our belief is that before it touches 9%, the inflation should come down. And that should not force the RBI to take the interest rate to those levels.
Okay, all right. We'll leave it there, Prashant. Appreciate you joining in. Great speaking with you. And thank you very much for joining us here on the program. Thanks indeed. So that's Macrotech Lodha Developers with some perspective on how the market is doing and rates, which he believes, home loan rates that is, which are already at a peak. That's the hope that maybe there is not very much to go from here. In that sense, let's look at the market, which is down 85 points now. So far, that buying the dip is yet to emerge, but we'll see. 18,724. We've done remarkably well, and over the last couple of days, slow and steady. Some bursts higher as well, but otherwise it's been pretty good. Overall. Let's also listen to the management of Britannia, and the company's entered into a joint venture with the French cheese maker to develop, market and sell cheese products in India. And they expect this to be a very large business over the next 3 to 5 years. Varun Berry, Managing Director, Britannia, is targeting 5 times growth in cheese portfolio from current levels. Listen in.
The total cheese market is estimated at about 5,000 crores. Half of it is consumer, and half of it is basically QSRs and institutions. So we already have about 11-12% share in that market. And what we would like to do is we would like to make this business 5 times what it is in the next 5 years. The cheese market, as you know, is growing very rapidly. It's growing at almost more than 20% CAGR for I don't know how many years. And frankly, I think it's a very nascent, very small category. So we have the opportunity, along with our worthy competitor Amul, to grow this market even faster as we go through the years. Joint venture is going to invest approximately 400 crores as capex over the next 3 years. There is about half of it which has already been invested in Ranjangaon. And then we've got some innovation products which are coming in, which will require another 160 crores of investment. It starts with cheese. It's only a cheese joint venture, but Bell does other products as well. As we go through the years, we'll see if we want to expand it to other categories as well.
That's Britannia for you. By the way, the Nifty slipped a little bit more. It attempted a bit of a bounce back about 30 minutes ago. But again, in the last 10 minutes, it's coming for some pressure, down close to about 0.5% right now. Remember, the backdrop from the Asian market is also fairly tepid. Across the board, you've got cuts. Hang Seng is down 0.6%. The Nikkei, that's the Japanese market, is where we are seeing the deepest cuts. That's down close to about 2%. Taiwanese market's also lower by nearly 1/3 of a percentage point. So after the big run-up that we've seen over the last couple of days, markets are taking a breather. Get into a break. Up next, we'll invite Nilesh Sathe, the former IRDAI member, and Shailaja Lal of Shardul Amarchand Mangaldas & Co. They'll be talking about the amendment to the Insurance Act. We'll also connect with Chandar Agarwal of TCI Express after this insurance conversation. And with TCI Express, we'll talk about the business outlook going ahead.